Welcome. My name is Dominik Loncar. I'm an entrepreneurship coach at Futurpreneur Canada. Futurpreneur Canada is a not-for-profit organization helping young, aspiring entrepreneurs between the ages of 18 to 39 secure funding in the form of a loan along with mentorship. Young entrepreneurs can borrow up to $75,000. In order to do that, one has to fill in a business plan and a cash flow. In this video, I will take you through the cash flow from start to finish so that you can fill it in, and before you know it, you'll be the pro. So let's get started. The first thing to do is to go on our website and look for the Resources tab at the top. Under the Resources tab, you will see the cash flow templates. There are three types of cash flow templates: General Cash Flow Template, the Black Entrepreneur Startup Program Template, and the Side Hustle. The Side Hustle template are for those people who are working full-time and want to start a side hustle business. If you want to launch a business full-time, or if you have started your business already within the last 2 years, then use the cash flow template. Please note, if you're applying to the BSP program, you can use the BSP cash flow template, which is almost identical to the cash flow template that I will be using in this video. Download the template and save it to your computer. Notice the download button. This cash flow template is free for anyone to download and to use. If you're applying to Futurpreneur, this is the only cash flow template we will consider. Our cash flow is specifically designed for those businesses that can start to make sales within 3 months from launching the business. In the template, there are tabs found at the bottom, and these tabs help you navigate the different sections. Once you open them, you will see these green shades. In the green shade spaces, you can make changes in what you write and the numbers you input. So for example, in the startup costs, I can delete computer, printer, etc., or change the title. Because each business is different, you can alter those subheadings or not use them. The various sections are connected to each other. For example, you'll see that what I fill in here, if I put in step 1, September 25, that will automatically carry over in the cash flow, as you see here. The same is true for numbers I input in the startup funding section. For example, if I put in $50,000, that will automatically show up in the cash flow. Very important, do not change the formulas or alter the cells by adding or taking away more lines. This will negate the formulas, and now you'll have to manually input all the cells and add and subtract calculations yourself, creating a lot of unnecessary work. We will be exploring 2 major sections of the cash flow. First, the startup cost, which is the amount of money you need in the first year to get your business off the ground. Or if you've already started the business, the money you need in the next year to move it forward. Secondly, we'll look at a 12-month cash flow projections. A cash flow is done month by month, estimating money coming in less money coming out of the business. It's another word for budgeting. We use a 2-year cash flow projection. I will take you through the sales forecast assumptions and monthly sales rationale, a key section in the business plan that helps explain your rationale for your sales projections in the cash flow. I will also briefly share how to fill the side hustle cash flow template. The purpose of a cash flow is to be able to make better decisions and understand what the financial implications are. Don't make the false assumptions that you're not good with numbers. After all, the formulas will do all the adding up for you. This is not primarily a math exercise, nor is it something you get someone else to do for you. Doing a cash flow is an essential tool for any entrepreneur. Don't confuse this with doing accounting or bookkeeping or taxes or even an income statement. The best way to use the video is to watch the various sections, pause it, do the work, then go back and repeat the process. Understand that this is a new skill you are developing. This takes practice. With each updated version, you get better at it. Your future entrepreneurial self will thank you. Let's start with the startup cost. We're going to take a fictitious example. Studio Q1 is a boutique fitness studio. Step 1, fill in the date you believe you will receive the loan. Because of the nature of receiving a loan takes time, the earliest you will be able to receive a loan is at least a month out, more likely 2 months out. If you're filling this out cash flow template in July of 2025, a safe starting time in step 1 would be to write in September 2025. Fill this cell. Write the month in full and the year. You can also put in the business name at the top right-hand corner. Step 2, estimate the total amount of startup money you will need to get your business off the ground. In this example, the total money they need is $50,000, 25 plus 25. At the time of this video, the maximum you can borrow is $25,000 from Futurpreneur and $50,000 from BDC, a partner of Futurpreneur. You can also borrow elsewhere, hence the addition of more boxes. For example, from other banks, label them, name the bank or a letter of credit or other forms of borrowing. Please note, those funds must already have been secured and approved before coming to Futurpreneur, including any grants. You can also add your own money under owner's contribution if you wish. You will just need to show you have that amount of money in your bank account. If you borrow more than $25,000, you are obligated to put that at least 10% of the total startup funds into the business. In this example, you will notice that the total startup funds requested is $50,000. They are obligated to put in $5,000 of their own money. However, one way to avoid putting 10% of your own money is to show that you have already spent that money towards your business. To show this, fill in the past purchases sections of the cash flow. Let's go there. Past purchases tab. In this example, you can see the entrepreneur has already purchased equipment at $26,000 and spent the money on website and branding and registration. The numbers refer to the number of those items. Sometimes you buy multiple of those items. This past purchases tab will automatically add all the amounts you input. In this case, the amount is over $29,000 and exceeds the 10%, so that they are not obligated to pay any more money in the business. Even if you borrow less than $25,000, it's a good practice to fill in the past purchases sheet if you have contributed anything towards the business. It shows the reader how invested you are in your business. Let's go back and continue from the startup costs. Step 3. Now you look at what you want the money to be used for. What the money can be used for is anything that helps move the business forward. In this example, they can use the money for rent and renovations if you've spoken to the landlord, but not if you work from home. They're using the money for equipment, for a POS system and inventory. As you can see, there are other areas you can use the money for, like supplies, business registration, legal fees, etc. Avoid putting in monthly marketing or operational expenses that will go in the monthly cash flow outflow. Startup costs refer to the lump sum cost you need to get your business up and running in the first year. Please note, you cannot put any money you have already spent on your business in this section. That goes in the past purchases section. You cannot use the funds to pay off existing debt you have already incurred. For example, if you've already ordered inventory and want the money to pay off that debt. Remember, startup costs and cash flow is all about the future. Using this example, the inventory will be ordered after they receive the money. You cannot use the startup funds for R&D, research and development. For example, developing an app or proprietary software or prototypes. You can also not use the money to pay yourself or use it for salaries. That must be reflected in the cash flow, which I will discuss later on in the video. It's important that you make good use of the money to move your business forward. Step 4 and Step 5. In Step 4, once you've filled in all of your items, again, feel free to disregard any items not relevant to you. You go on to Step 5. The next step is to go across and show which set of funds you will be taking it from. In this case, we have two sources of funds, Futurpreneur and BDC. It doesn't matter which one you take it from as long as there are sufficient funds. In this example, the first and last month's rent and renovation costs come out of the Futurpreneur portion. If you don't fill this in, a negative balance will show up in the right-hand side. That lets you know that you've done it incorrectly. Go back and correct it. Do this process for all the items. As you do this, the template will add up the startup costs and inventory total. It will also add all the totals so that the amount matches your funding request. If the total does not match your funding request, in this case $50,000, you have done something incorrectly. Go back and check what you need to fill in again. It will also show how much money you have left in the working capital. Working capital is another word for money in reserve. This is a cushion of money you can have to offset excess expenses over revenue. The question then is, how much money should you have in working capital? The answer? It depends on the type of business you have, how much monthly operating costs you incur, and how much sales you make. The truth is that after filling the startup cost section and filling out the cash flow, you may need to go back and readjust the startup costs. Remember that using this template is a work in progress. If you're applying to Futurpreneur, you will have the opportunity to show this to one of our staff and get feedback. Now that you have a better understanding of the startup costs, let's move on to the cash flow year one template. From here, you can click on the cash flow year one tab. What you notice here is that the first month starts at what you projected and filled in the startup costs. In this case, September 2025. You will also notice that $50,000 has been transferred automatically under funding sources. The money you receive from Futurpreneur will be in one lump sum. It bears repeating, cash flow is projected money in less money out month by month. You will see under A, total cash inflow. That represents the total dollars you're projecting to come in the business for that month. Line E, total cash outflow, represents the total amount of money leaving your hands for that month. And line F represents the difference between the two, whether you are projecting more money coming in as a surplus or will have to pay more money out, incurring a loss. Line H is cumulative cash flow. That represents what is left in your bank account. Now that you understand the overall principles, let's do a deep dive. Let's start with the cash inflow section. You will notice the subsection of cash inflow, sales assumptions. That represents the number of units you project on selling for that month. In many cases, it represents the number of customers who will buy. The sales assumptions are up to you to decide how you want to label them, but you cannot go past 4 cells. Please do not alter the formula or add more cells, which will negate the formula, and now you will need to add and subtract every month manually. If you have many products or services, you will either need to group them or come up with an average, which is what I get most of my clients to do. A cash flow is a reflection of your business plan. They are interconnected. A sales forecast assumption is done in the business plan, explaining your rationale. Let's take you to the Studio Q1 sales forecast assumptions. This typically is part of your sales and marketing plan in the business plan. It's less important where you include this as long as it's part of the business plan. In part 1, you establish general overall sales forecast assumptions that you will refer to when inputting your numbers. In this area, you mention your busy seasons and slow seasons if that is relevant to your business. This general assumption makes sense in the context of a gym. The next area to focus on is coming up with your general units of sale. They may be offering different packages to their customers. However, they have decided to use the most common package of $1,000 a year, paid monthly, roughly $85 a month, and the most common personal training package of $300 per month. Remember that they may have other offerings. The key is to look at practical ways of assessing sales. They also explain their assumptions based on industry averages, in the case of membership renewals, and their own experience, in the case of personal training packages. You may have many potential categories. For example, you may have 8 different service offerings, or you may have all your jobs done with custom quotes. In that instance, you estimate your average per customer, or average per customer order, in 3 different categories: high-end, mid-range, and low-end. Or you may sell multiple products. If you have a retail store or a restaurant or a cafe, it's best to have average purchase per customer. If you have an online specialty clothing line, for example, you can pick your 3 biggest sellers like shawls, scarves, and wool hats. I would still recommend that you go with average customer purchase because it's so much easier to wrap your head around how many customers will buy per month than strictly saying you will sell $10,000 worth of goods and services. After you have stated your general sales forecast assumptions, you move on to part 2. This is the monthly sales rationale, done for 6 months. You are providing details to how you came up with your numbers. The details are based on realistic assessments of your situation and what you stated in your sales and marketing plan. You can see how all of this interconnects. In this example, if they get the money in September, they will be ordering the equipment, which could take a month to get. In addition, they need to renovate the place. Hence, they are not officially open yet, but their cash flow starts in that month regardless. From a marketing perspective, there are things they can do beforehand. This makes it possible to justify getting customers once they open in October. Take a look at activities and assumptions they make for each activity. Are they realistic? For example, the entrepreneur could email his contact base stating that he has his own gym and then follow up with a phone call or an in-person meeting. The aim here is to show the reader that they're going to be active in getting customers, taking into consideration the season of the year and the time factor it takes to get new customers. Notice that these assumptions require persistent action on the part of the entrepreneur, from posting on Instagram every second day, contacting and following up their contact base, attending community events to let others know what they are doing, and following up with people who are interested. No one knows if these actions will produce the exact results they say they will. Yet, we can all agree though that if they don't have specific action plans, very little will likely happen. Being an entrepreneur means you are proactive in your approach. Sales does not happen by itself. This tool allows you to plan major marketing initiatives. In this example, the biggest membership sign-up happens in January, and as a consequence, they would push their marketing initiatives in December and January. Plan out your marketing sales rationale for about 6 months. You will start to see a pattern will emerge. Once you've done this, you can transfer this information in the cash inflow. The cash flow needs to match what's in the sales forecast assumptions. Let's go back to the cash inflow. Based on the sales forecast assumptions we just went through, you would fill in the sales assumptions. They have 3 key units of sale: the gym membership, personal training package, and protein shakes. For the month of September, as the sales forecast states, there are no sales as the entrepreneur is getting ready to open. Their job now is to enter the dollar amounts for each category. This is all listed in your sales forecast assumptions. When you enter the unit of sale, the template will automatically calculate the total sales from that category. For example, they plan on getting 8 members in October. The template will calculate it, which translates into $680, and so forth. A reminder, please do not add any more cells or change the formula. The template will also add the total money for the month under A, total cash inflow. Now that you have a better understanding of estimated cash inflow, let's turn our attention to the second part of the cash flow, cash outflow. Your cash flow outflow starts from inventory costs and ends at line E, total cash flow outflow. A reminder that you only have to fill in what is relevant to your business. You will notice the percentages next to the inventory costs. Only use these percentages if and only if you are actually buying items on a daily or weekly basis. This works well for a cafe, a restaurant, or a retail store that buys inventory regularly. If, for example, I put 25% here, meaning that any cost of goods are 25% of my selling price, this will tell the reader I'm reordering within that month when I make a sale. However, if you buy inventory when your inventory gets depleted to a certain level, then don't use the percentages. Just input 0% and manually write in the number. In the case of Studio Q1, they already purchased $900 worth of protein shakes as their startup cost. This is at cost, which may well be $1,500 in retail, whatever their margins are. They are not going to reorder 1 or 2 protein shakes every month because they have more than enough in stock. Instead, they will reorder in bulk when they reach a threshold, depending on how long the order takes to arrive and the minimum quantity order. In this case, when they have sold about 40 protein shakes, they will reorder. They just put the number in the month they will reorder. Know your sales depletion reorders. This means monitoring the cumulative units sold and what's left in stock. Now let's turn our attention to general expenses. You now go down the list filling in and ignoring and changing the title of the expenses that apply to you. You start by anticipating and accurately estimating what that would be, money that will actually leave your hands. This is where you go line by line and think through what can possibly come up. In this example, although the rent is $3,600, he has paid first month's rent in startup cost, and the landlord has waived paying September as he's renovating. You also need to provide explanations of your expenses in the operations section of the business plan. The marketing expenses can be explained in the marketing sections of the business plan. Some of your expenses will be set monthly costs, in which case it's straightforward to do. I'll show you how easy that is to do. The cash flow is a yearly cash flow, but done monthly. It's important to think through when things will change, like paying someone to do your taxes in March, in this example, or for a push to pay for Instagram ads starting in December. Expense numbers will also force you to find out what the amount is by getting a quote or asking others who have similar businesses. In this template, you will notice under Other Disbursements, all your financial costs in borrowing money are automatically inputted. The interest at this time of this video is 8% for Futurpreneur, which is prime plus 3%. For BDC, it's 8.7%, a floating rate plus 1.65%. Please check our website with our latest cash flow template for the interest rate at the time of your application. The startup costs are automatically transferred in this section from the startup costs. In this case, $41,400. This tells the reader that you need that money to spend to move your business forward. In line E, it automatically adds up all your cash flow for the month. The difference between the money in and the money out is found in line F, net cash flow. Cumulative cash flow is line H, which represents what you will have left in your bank account for that month. The ending amount in September is the opening amount for October, line G. You will notice this happens throughout the cash flow. The closing balance of 1 month is the opening for the next month. Also note that you can incur a projected loss in a month, as they do in November and December in line F, provided there's enough money in the bank account, which is line H, cumulative cash flow. However, at no point can your cumulative cash flow, or line H, in any month be negative. There's no such thing as a negative dollars in your bank account. If that is the case, you have done something incorrectly. You have some choices. You can increase sales, you can decrease expenses, or a combination of the two, or even ensure you have enough working capital. Hence, we come to that question, how much working capital does this person need? They had asked for $8,600. As you can see, the lowest they go in their bank account is just under $5,000 in December. The amount of working capital depends on what your monthly operating expenses are. If monthly operating expenses are high, it makes sense to ensure you have at least 3 months of expenses covered. However, that may not always be possible. That is not the case here. Instead, this is something you'll have a discussion with the organization you are receiving the loan from. What you need to keep in mind is that if your cumulative cash flow is high, for example, $40,000, and it doesn't go below that amount, the question then becomes, why do you need to borrow so much money? The lender, in fact, may tell you not to borrow so much money. At the other end of the spectrum, you want to ensure that for each month, you do not go below $1,000 or $2,000. This can mean it's dangerously close to tipping into the negative. Owner's draw. For Futurpreneur, you need to show to the reader that you or someone in your business can make a living doing this. Not necessarily from the beginning, but usually within the last 3 months, going from your first to your second year. However, how much you take out depends on how much you have in your cash flow. In this section, this entrepreneur is taking money to pay themselves starting in May 2026. If they take money out, they should take it out in consistent amounts and do them in increments. Please note that for those months you do not take any owner's draw out, you will need to discuss how you plan on covering your living expenses in those months. The nature of a cash flow is also tied to your personal life. That's why they can be such a useful tool. The Futurpreneur Cash Flow Template is a 2-year cash flow projection. In year 1, you can look at the financials at a glance by looking at the totals for each item found at the far right. For example, it will total up your total sales you're projecting for the year or the total rent. This allows you to see the financial implications of each item for the year. Once you have done year 1, there's a tab for cash flow year 2. You do the same process. All the itemized sales you did in year 1 will remain as you can see them here. You then do the same thinking process you did for cash flow year 1. Notice some changes the entrepreneur made with their gym membership, increasing them from $85 to $95. Also notice that the principal payments found in other disbursements starts to be taken out in year 2. Your sales projections for year 2 need to be as realistic as possible. As a general rule, don't go over 100% increase in sales from year 1 to year 2. Hopefully, you've had the opportunity to better understand the cash flow inflow, sales forecast assumptions, and the cash flow outflow. For those doing a side hustle business, meaning you are working full-time and want to start or have started a side hustle business, please download the Side Hustle Template. Start with the Intro tab. It gives you an overview on what you need to do. The key difference is to fill in a personal budget in step 1. Please watch this video from the beginning on how to fill out the past purchases, startup costs, and cash flow. The principles are the same. In this section, I will just go over how the Side Hustle program differs from our startup program. In step 3, we are showing a fictitious online protein powder business. In this case, the entrepreneur is requesting $15,000 for their side hustle. They are not required to fill out the past purchases, so they can skip this part in step 2. In the startup cost, step 3, if you're coming to Futurpreneur to start a side hustle business, the maximum loan amount is $25,000. You still have access to a mentor. You can see after they have requested the dollars for their equipment, their website and branding, and inventory, they have a working capital of $3,900. Go on to step 4. In cash flow year 1, the money and the dates get automatically transferred. In addition to making sales assumptions, since this is an online business, you must include shipping, a revenue you receive, which is what the customer pays you. The owner, in turn, will be paying for shipping to the customer, which is reflected as an operational expense. The cumulative cash flow can never go into the red. However, they can incur a loss, as they do in April, because they are buying more inventory, and as long as they have enough money in their account to offset the losses. They would follow the same process of projecting sales and expenses in year 2, step 5, as we did in the previous example. However, there are 2 notable differences. First, for a side hustle business, one is not required to provide a business plan with the sales forecast assumptions. You will be filling out an application form with a personal budget and using this cash flow template. Second, for the first 12 months of this cash flow, your side hustle business must remain your secondary source of income. You can see from this example that the entrepreneur takes a nominal income for themselves in owner's draw in March to June. The purpose of this program is to minimize risk while learning the craft of being an entrepreneur. Creating a cash flow projection is crucial for every entrepreneur because it provides a clear picture of how much money moves in and moves out of the business. It helps to anticipate shortfalls before they become critical, allowing for smarter decisions around spending, pricing, and cost allocations. Keep at it. You learn by doing and fine-tuning. This may not feel glamorous at first, but the skill set you'll learn here will be invaluable to the success of your business. All the best.